to BTC. Now, we're going to run a very quick analysis on dollar index, then likewise every other instrument or every other currency pairs if time actually permits. Now, quickly, we totally understand that the market specifically on dollar index has been extremely bearish for the past few weeks, past few days, right? Yeah. Now, a quick one, we totally understand that the market likewise gave us a quick break of the structure, but we're going to follow structure as it is. Now, what's that? The first thing we want to totally see is that from this end, which is the left-hand side, we totally understand that the market broke structure. But likewise, if we dive to the 3-month time frame, you will also understand that the market is reacting from a valid point of interest. Yeah, and that point of interest likewise is at this perspective. Okay, so we can totally see that dollar index gave us a quick break of the structure, which is below this low. Okay, you had a break of the structure below this low. Now, after that break of the structure, you notice how well the market ran through into this point of interest, which is directly into our origin, the origin of this break of the structure. What led to this break of the structure into this level is this, which is our point of interest. Now, we dive to the right-hand side where the market is giving us that reaction, right? Remember, the right-hand side. We want to totally understand what the market is doing at this point of interest. Now, quickly. Now, we notice how the market gave us a very nice swift reaction from point of interest, right? That is from this area that has been marked. Notice how well the market reacted from it. Without a problem, we swiftly went off through it. Now, checking through structure, left for me, I keep on saying this, is the market likewise have an area of liquidity that's been created now, which is below this low. And left for me, likewise, I'm still seeing dollar index below this, actually. I mean, say anyways, but we're going to be watching through what the market will be doing, its intentions, reactions, intentions. You see, there are two words, reaction and intentions. Once the market reacts, the next thing is an intention. The reaction, what follows is either we call it an intention or we call it a validation. So the market has reacted from a valid point of interest, okay? Every single area the market will always react from is extremely valid. All we need after that reaction is a validation on the market side, notifying us that we can continue that flow. Okay. Now, simple. After understanding that the market reacted, I want us to play a very sweet game of chess. If we check carefully, you would notice that even if I'm to likewise still want to look for trade case scenarios for dollar index, yeah, I also want to totally understand that the market hasn't even gotten to a valid area of point of interest. If I'm looking forward for this market to continue, then I should be seeing the market below here. And likewise, having the market below here is quite risky. Now, what I'm saying so is this. The market likewise created liquidity below the marketplace. But anyways, let's forget about that. That's long term. The market reacted from a very valid area. Trust me, as I said, every single area the market reacts from are always valid, okay? I call it reaction. Then the next thing is an intention that follows. Now, you notice how well the market reacted. And after this, giving us 1, 2, 3, we had an impulse, which is momentum. Now, when the market gave us momentum, we failed to do something, actually. And after this momentum, the next thing we're supposed to see, the market was supposed to create structure, proper structure. Is supposed to likewise create an area where we know that specifically that, okay, the market creates a low or creates a high, then it's been swept and automatically have a validation to continue either bullish or bearish. But in this case, the market, as I said, did not create a proper structure. What I mean by proper structure is we didn't create series of higher highs, higher lows, higher highs, or our advanced structures. Now, notice how well the market gave us momentum, but didn't give us distance. You notice how well the market likewise ranged for what? 4 months. We ran into January, we ran into February, we ran into March 2023, we likewise ran into April, we ran into May, June, July, August, September, October, November. See how long the market took its time to run through into this area of imbalance, right? That was created in the marketplace. Now, just like we've all known it, we want to always see the market run through back into internal, come back to seek the external. It's one thing the market must not always miss. After the market takes out a level of internal, right? After the market takes a very quick level at an area of internal, what's the next thing you want to see? You want to see the market take a level of external. And that area of external you should actually have a reason. Now, what I'm saying should have a reason could be probably the market created liquidity pool, created double bottom, created double top, thereabout, anyhow you want to call it. Now, as I said, the market reacts all from imbalance, break structure, right? As you can see, broke structure completely. Do not also forget, the market is likewise reacting from somewhere that is valid, right? But furthermore, of more bearish move, we will need the market to sweep this low automatically to validate the POI the market has reacted from. Now take note, as I said, we need this low to be taken to validate that this higher time frame point of interest, this higher time frame point of interest is going to be valid, right? So we need the market to anticipate this low, or we want to see the market seek for this low. But you see, the market, in order for the market to do this, we have to create proper structure, because it's extremely very important. Now we move likewise. As I said, let's focus on the right hand side after understanding what the market have actually done on the left hand side. Remember, I said I want to see the market into this level, right? And when we get into this level, I want to see that drag that quick a little bit of range, right? Then we could probably be sweeping this low off automatically. But as I said, we want to see this market play out, give us structure as usual, creating series of higher highs, higher lows, right? Then we seek below. A quick one. Now, we also want to understand if the market has fully returned back into 50%. Now, you notice likewise, we've dived into the level of discount, into the level of discount. Can I actually say truly we are at a level, at a POI, it's reacting from a POI that is likewise valid on the market's end, okay? But we're still going to research further. Now, quickly, as I said, let's focus on the right-hand side. We are now done understanding what the market did at the left-hand side. The next thing is anticipating what the market should do for this week, okay? So likewise, we want to totally understand and know exactly where the market should be headed to, or where the market should be going to. The market swept off this low, which is quite very important, right? Swept off that completely. Now, what can we see above? You can see what? An area of liquidity, right? Internal structure, we have imbalance, we have this momentum, but we fail to have distance. So the question now for this week is, can the market actually approach above this level at the 102.013 level? Or am I specifically just going to settle for this key level that is actually obvious that the market is going to be taking, right? Which is the level of 100.296 level. I'm certain the market should take this. I'm very certain we are seeing this high being swept. But the next thing I want to see is it possible that we have this week rate this and run into this imbalance inside the internal structure? So that's left for us to actually know. Are we ready for the retracement? Oh yes, the market is fully ready for the retracement. But we need one thing to be validated. We need this candle's high. We need the high of this candle to be rated to validate that the market will continue its pace, its move into this level of liquidity, okay? Into this level of liquidity. Now, notice how well candle one, right? Left, as I said, I'm actually already seeing a form of a level of retracement already into this week. I want to see this week give us a very blissful buy case scenarios on every pair that holds dollar as base, okay? So I want to see the market dive into this high, as I said, this key level. I want to likewise see this week possibly rate this. So this will all depend on the major news we'll be having to see how well it's going to facilitate the market pushing back into this area of liquidity, right? Now, if I'm actually going to be drawing my Fibonacci retracement, I should be seeing this level between the level of premium and the level of discount in between, okay? Now, remember, as I said, we have our candle pattern. We have this area left for me. Likewise, my candle one is a level of liquidity. My candle two is the level of liquidity sweep. My candle three is where orders have been transferred for the market to continue. So it's more or less like a money transfer where the market could give us what further retracement back into the level of premium. Okay. Normally, we already know the market must always seek the level of premium down into discount. If we are bearish, that is, if we are bearish, the market always seeks for premium, then we return into discount consistently. If the market is bullish, we run into premium, return back into what? Into discount. We must always find ourselves back into discount to premium, while the level of what bearishness we're looking forward for premium into discount. So that is that for this week. As I said, I have my candle one already notifying me, letting me know that we already have this sweep. We have a sweep below this previous candle, my candle 1, my candle 2, and my candle 3 that specifically tells me that the market has done money transfers, right? We are fully ready, fully enacted for the market to continue retracement back into this level. So this analysis, likewise, is not just for dollar. It is likewise also meant for Euro USD, GBP USD, likewise USD CHF, USD CAD. So if I'm looking for further buys into internal structures, I should be looking for buys likewise on USD CHF into internal structures on possible liquidities resting in series or in the areas of internal. Okay, but for now, use this analysis to make sure that you gain your buyers on the lower time frame. So dive into the daily, dive into the 4 hour, the 1 hour, right? You could then do a little brief analysis, break down into your 15 minutes, look for entries on the 5 minutes. Possibly if you could do it on the 1 minute, then fine. That gives you very nice precision. I've already said I'm looking forward for dollar index sweeping this high, the 100.252 level, right? Into this key level where we have the 101, have 101.9 696 if I'm not actually mistaken. So down into this imbalance that sits between premium and discount. So we have candle 1, liquidity sweep. Candle 2, I repeat again, we have liquidity sweep, right? Candle 3, we have this orders that has been transferred. Likewise, we will be having a little bit of the market sweeping this high, right? We have this high that will be close with body probably. Then we have a form of kind of retracement to continue into the fair value gap or the imbalance situated at the level of premium. So I wish you good luck and good trading.